Wonderful to see so many familiar faces and some wonderful new faces. So welcome, and we look forward to the rest of the event. It's tradition at Outsell to share with you our combined perspective of what we're seeing in the industry. This industry is made up of so many different segments and so many narrow and niche companies. We look across all of that to say what's going on each year. And we deliver that to you. First and foremost, I want to shout out to Lee and Ned and our analysts, our industry outlook. This is the 21st year. Feeling old saying that. I can't believe it. But this is a reference guide to all things information industry. You'll get a digital copy of it tomorrow. Share it with your teams. Use it as your Bible. Talk about what the growth rates are and the key trends are. But you each have a copy of this with you, and it's a backdrop for the coming year. What I'm going to do today is just spend a few minutes highlighting some of the key things that we see. Our theme this year for 2019 is Trust is the New Algorithm. I'll come back to that in a little bit, but I want to start with where we left off last year. We said it was the year of outselling, outperforming, and 2018 was going to be all about benchmarks, best practices, really all about execution. So what does that mean? Let's first start with how we're doing as an industry. So you can take these back with you to your office to look at how you're doing against the norms. The first is the industry forecast. But what I say is that this is really a benchmark for growth. We have about 10 segments we look at. Within that, a total of probably 30 segments. Each of you and your companies are in one of those segments. And the question I would ask is, are you growing faster? Are you growing slower? That's the question you can take back to your office to say, how are we doing as a company? And as we've said for many years, and as you heard earlier from Chris, the global economy drives GDP. GDP drives our customers' budgets. And so most of the time, we're always in a 2 to 4% growth rate. That's the beauty of this industry. It's also the Achilles heel of the industry. It's why we also have so much M&A to get out of the growth norm. So organic growth, we took a subset of companies and we look at their organic growth. The 10, 15 largest companies in the industry, guess what the number was? 3%. The outlier was Gartner, who is a sales machine. Their normal growth was about 10%. Now, if you put in the corporate executive board, the inorganic growth, things will skyrocket. But it's the inorganic growth that drives our industry to the norms that get to where shareholders are pleased, where boards are pleased, where private equity owners are pleased. But this is the norm. So take this back as a benchmark. Second one is, how are you allocating your costs? We get this question all the time. Where do things break out in terms of some of the key cost functions in our industry? This is based on analysis of 130 companies, all different sizes, all different segments. This is a typical norm. We've seen content production come down in the last couple of years. This could be editorial, it could be analytics, it could be analysts. Depends on your flavor of content creation. What's interesting is since last year, sales has come down by a percentage or two. Marketing has gone up. So we're seeing a movement of dollars just a bit in terms of cost allocation. What's interesting underneath this is gross margins, still reported to be on average 40%. I expected them to be higher, and there are indeed outliers much higher. What this tells us is that our sales investments, our marketing investments, and our technology investments still aren't improving our margins. We as an industry are still faced with margins on average about 40%. I think they should be about 50%. So that's an important benchmark as you think about your industry sector and your particular company. We talked last year about measuring sales. And this is a benchmark that we do where we look at what we call the last mile to the sale. These are the little itty-bitty details, and I talked about them last year, that really make the difference between whether or not you're going to be there when that person calls you or they come onto your website. If you've done all the marketing in the world and you're not picking up your phone, or there's no phone number on your website, you're not going to have the results that you want. These are the details that we are measuring. And we've tracked and analyzed companies 2 years in a row. Here's our top 10. Gartner came up from number 22 last year. Same methodology. Forrester's on the list for the first time. Bloomberg BNA, congratulations. And you'll see different movements. Some came down, some came off completely. The devil is in the details. It's all about the execution. And I want to start with where we left off last year. Take those 10 metrics home. Go call your 1-800 number. Go call your sales function. Go check out your website. Are there broken links? Are there phone numbers? Basic stuff. I called a CEO one day and said, your telephone number is wrong on your website. Just some of the basic details. And I'm going to talk also about gender in the C-suite because we benchmarked this too. We've tracked the top 350 companies. We still only have about 6% of those 350 companies led by women. And we only have about 21% of the C-suite held by women in the industry. And most of those positions, I will add, are HR and marketing. So, gentlemen, we have work to do. Gentlemen in the room, we have work to do. Because this is an issue that we have to solve together. Because we talk, and I'll talk a little bit about this, we talk a lot about talent and the lack of talent. But we have major gaps in the way that we are approaching things as basic as gender diversity. I love all of you in this room, many of you clients for many, many years. But there has to be more women around these tables. And I will say it's not a men's issue or a woman's issue, it's our issue. And men are very much part of the solution. So I invite you to that. Because the benchmarks, if you go back and look at your company, you will mirror, I'm almost positive, the statistics that I just cited. So I'll challenge you to improve it. Maybe next year when I get up here, it will look different. And that will be 22 years in. All right. So what's ahead? If those are the benchmarks and the norms to take back for the way your business is operating now, what's ahead? And we are seeing across the board, all of our analysts are advising clients every day about the impact of these technologies in our industry and in our businesses. If you want to know about blockchain, call Will Jan. If you want to talk about AI and legal, call Hugh. If you're interested in what's going to be happening with knowledge generation, call Randy, who's written some pieces, or Michael Zekin, who's new to Outsell and looks at the intersection of technology and content and cognitive and AI and new technologies. Robotic process automation we spoke about. This is an alphabetical list. This is not a Outsell hype wave, but we are seeing AI and machine learning going mainstream. We're seeing blockchain start to go mainstream. Some of you in the room are using RPA to improve back office processes. I invite you to connect with one another and learn about how one another are applying these technologies. But this wave is coming fast. We have just seen in the last year a lot of momentum, particularly in machine learning and AI, to solve basic tasks and provide improved creation in our operations and solutions for our clients. So this next wave of technology is something that we're advising about, writing about, researching, and looking at what does it mean to particular segments? What do these technologies mean to B2B? What do they mean to law information? So with all this technology, almost every client that we are talking with and advising is trying to figure out where they are on the value pyramid. We've seen tremendous amounts of data commoditization, data proliferation. These are things we've been talking about. We saw a lot of examples in our growth tank this morning. But the important part about sorting this out, and many of you are in different places of the spectrum. Are you providing raw data that's smart, normalized, distributed through APIs? Is that your future? Is your future to incorporate that data into platforms and workflows? Many of you are doing this. What's happening at that third layer is critical decisions around, are you going to integrate a lot of third-party sources? Are you going to allow open integration with your client sources? Are you going to allow them to text mine and work with your data in new ways? And do your privileges support that? And are you going to be able to do predictive analytics and prescriptive analytics on some of the data sets that you might not own, that might be out there free? The reason why this is so critical is the technology wave that's coming again, and we see is going to really speed up in the next 2 to 3 years, is because companies are trying to figure out where they're placed on this spectrum. Are we a pure data house? Are we going to deliver API? Are we going to deliver through a user interface that's a finished product and goods? Or are we going to do both? These are fundamental questions, but the next technology wave and the demands of customers are demanding that we have answers to these questions. So this we see is a critical part of the future. And companies are sorting this out right now. Been sorting it out for the last couple of years, but it's changing again. Because if you look at the next generation of users, they want open data, open source. They want, I was just talking to Tracy earlier, looking at PhDs in science and the way they're working with our content, completely different. And being able to know where we are on this spectrum is critically important. And here's why. Because when you overlay the technology and you overlay the industry that you might be participating in, and you look at the value chain of the industry and the value chain of information services, this is what you get. And this is just an example in energy. If you're in travel, if you're in construction, if you're in health, if you're in industrial, if you're in company data or serving marketing, every sector that we analyze and track and serve has a value chain that looks something like this. And we're very committed to continuing to produce these. This is just one on energy. We've done agriculture. We've done construction, many more to come. But the point that I'm making is that pyramid, combined with the value chain of the industry, means that we're participating in ecosystems that are very, very noisy. And so knowing where we play is critical. Are we a data provider? Are our partners now our customers who are now competitors? This is the future. This is what we see ahead. And knowing where we fit in this ecosystem, critically important for most leaders, because this is the noise that creates confusion in our companies or creates confusion in our talent or creates confusion in the way we message. How do we actually talk about ourselves in the ecosystem that we're competing? We've got technology players in there, Amazon and Google. I'm hearing repeated stories of retailers getting off of AWS because they don't want Amazon understanding what their underlying services look like, because everybody is now participating in much noisier ecosystems. So knowing where you are, critical. Each sector in information services has a particular hot button issue. I asked our analyst what they were in their particular sector. Hugh thinks it's about AI, machine learning, delivering real examples of end-user solutions, like Westlaw, Edge that just launched. Using AI to do predictive analytics, prescriptive analytics. We're seeing that in law. He thinks that's the hot button issue. Scholarly publishing, Joe, very much focused on open access, friction with customers, what's happening in that environment. Will Jan thinks it's all about blockchain changing fundamentals and the way financial services happens. He said to me the other day, what happens if in a traditional environment of issuing credit, we're in the future and we're in a blockchain environment and transactions are anonymized? How do you issue credit in that environment? And what happens to the credit information providers? Their world has changed. He's also looking at alternative data. He's our analyst that looks at credit risk and finance. Kate in education talks about year over year, the very slow pace of change. People in Silicon Valley will have you believe that things are upended in a night, all sorted out by the next day, and Google and Facebook and Amazon have won, and maybe Uber. In reality, in our education markets, things are changing still very slow. We talk about analytics. We saw a great AI example earlier, but we're seeing still the tension between the technology and the institutions and how fast that's changing or not changing. I think we had some statistics showing how favorable print still is in some environments for learning and the taking of notes. Many times the digital offerings aren't supporting the basics of working with value add to print. And Randy wrote me a note. I have to read it because this about says it all for B2B business intelligence. Bottom line, companies have to diversify across media, earned, owned, paid, advertising, content, data, intelligence, research. Used to be you could pick 3 and coast. No longer. As we know, data is central to strategy. If it's not already connecting across the business and feeding products and leveraging into new revenue streams, it's over. Hyper niche or hyper scale, but you'll die in the middle. Be number 1 or number 2 in your segment. So that's what we're seeing as the critical hot button issues playing out in some of the macro segments. He wrote a great insight this morning on the importance of intent data and integrating it in B2B. I invite all of you who receive our an analysis to look at that piece. Some of you in the room are part of that ecosystem, so many things playing out. How do you see the future? So if that's our analytic view, if that's our analysts and our take, what are you saying? We survey you every year. Thank you for participating. Here's what's on your mind. For 2019, you are saying, thank you, Chris Giles, for teeing this up so perfectly, tariffs, trade, Brexit, creating uncertainty because we don't like uncertainty in the economy or GDP because that's our home zone. You are all saying to us predominantly that growth in your new products, new product development is where you're going to drive growth in core markets. Let me say that again. Where you'll get growth is by developing new products for core markets. That's the future of how you're looking at the industry and what you're developing. Improving new sales and retention are your biggest operational drivers for improving 2019 growth. And in the year ahead, many of you are talking about putting data and analytics into your offerings. And that is, again, going back to that pyramid. Where are we? Are we going fully up? Do we have the data we need? Do we have the third party? What's our place in the ecosystem? As you look ahead, you're looking at new products for those markets and putting more data and analytics in your offerings. And talent remains the biggest obstacle for what you're trying to achieve. This is what 2019 looks like in your eyes. This is the outlook through the lens of the CEO and the surveys that we gather from each of you who participate. So as I think about all of this, some paradoxes came to mind. And I was talking to several of our analysts last week. And I was sitting back from the industry. We're in a very privileged position to be of the industry we serve and to see things from different neighborhoods. I call them different neighborhoods of the information industry. So I'm going to take you through some things that run through our mind as we are in the inside looking out and as we kind of banter about what we're seeing. And some of this will be closer to home. Some of this will be farther out. So I noticed that CEOs in the same survey were slightly pessimistic about the economy. So you were a little less bullish than prior years. But you felt way better about your own growth. Like, your top strategy for investing in data and analytics is really the key driver. You're awake at night, AI, analytics, where do I fit in the pyramid? And yet, only 20% have AI in place today. Only 2% have blockchain solutions. 53% of you don't see a use case for blockchain, even though it can upend many of the industries we serve or create new means for tracking things. What happens to court records or legal documents? What happens when Sweden makes the big move? And we're relying on that as a data source. Just thinking out loud. So we're thinking about technology, but we're not necessarily using it. We're talking about putting analytics in our offerings, but we're not necessarily there yet. And what was really interesting to us is that when we analyzed the results, most of you were talking about using data and analytics in your products and offerings, but way, way down at the bottom of the list was using in data and analytics to run your own businesses. I think sometimes we have to think about doing the last first to be good at doing the first last. Being analytics driven as we think about making that part of the fabric of our offerings. I know these are things I think about, and I know you are too. But they are our future. These are paradoxes that we have to wrestle with in our future. So the other thing is that we're lamenting talent gaps. I hear it everywhere I go. I see it in the data. We can't find people. But we're not going to find people if we overlook half the population as it rises into our executive ranks. I'm going to go back to that because it's really important to be diverse in culture, in gender, in religion, ethnic groups. We have to be better at that. We have to be better at that. It's a paradox to me that we lament talent, and yet we are here with the mix that we are. Farther out, it's been really interesting this year to watch companies go private. I think this is probably the year where we've seen more of that than all at once. So we're seeing companies go private at a faster rate. Dun & Bradstreet, newly announced, Nielsen, Newstar, TR, Refinitiv, the big news yesterday. Congratulations to those of you in the room from the company. Big moves to go private. Springer Nature was not able to go public. They're still private. So we're seeing this move to private, much more private equity ownership in the industry than historically. But here's the rub. Jay, where are you? Jay, one of our sponsors, SRI Cheyenne, published a brilliant report that actually measured what we knew was going on intrinsically by the turnover we see in our client base. Turns out, in a report, is something broken in private equity? 73% of portfolio company CEOs don't make it through the first investment cycle. 59% don't make it through the first 2 years. So those of you in the room who've made it, congratulations, you're still here. But it's a paradox as we go private and we make the big moves and we think about our new owners, many of us won't make it in the same environment. I think that's really interesting. And I really invite you to read the report. The statistics are actually not SRI Cheyenne's, but they looked at them and said, what happened? What's going on out there? So CJ, get the report. It's a must-read for any of you looking at the private equity environment. Another paradox is we say we want new products and more machine learning and AI. Many of us don't have chief product officers. We have chief technology officers, but they're very, very different than chief product officers. And we need to have that talent at the table. Chief data officers, yes. Data science, yes. Technology, yes. I call that the CDO and the CTO. But the CPO is the glue that makes it come to life. And many of the companies that we speak with don't have chief product officers sitting at the table with the CEO and the rest of the executive team. But they're the glue that exists on behalf of the client and the customer and the services. So we find that as a paradox as well. Where's your chief product officer? Many of you have them, but many of you don't. And we talk to a lot of companies that jump straight to technology. Technology, as we know, is an enabler. It helps us solve business problems. It's not necessarily going to be the way that it gets manifested into great experiences. We need that chief product officer, that head of product. And as we look on the back of Equifax, going out broader now, we talked about privacy earlier. Equifax was a disaster for our industry. They are of our industry. And in one good broad brushstroke, we were tainted yet again. But what is it about Facebook and Google? Why is it that Cambridge Analytica and 50 million users going breached? Why is it that Google can send our Gmails to their developers? Why is that okay? We're of the information industry. Why are we using those platforms? I'm not talking about search, but I am talking about Gmail. And I'm thinking about we can vote. We can vote with our dollars, our behaviors, our activities. It's a paradox to me that these companies are unregulated. And I am not a super pro regulation person, but I'm sitting here saying, isn't it odd that we're still regulating broadcast news? And we leave these platforms to go untethered in pretty much everything they do. And thank God for the EU, because it's about the only big stick that we have in terms of managing relationships. So think about your relationship with the platforms. That's a paradox to me. Whether you're in media and advertising, I know Google is the lifeblood of many companies in the room through our, but there are also ways we can do other things, fight back, think differently, make a challenge. So when I think about these paradoxes, I think they breed trust, or perhaps even distrust. What does it say to talent that we're trying to hire if we don't look diverse? I'm just going to pick on that because it's important if we're going to attract talent to represent global points of view, to represent new points of view. That's a talent draw. If we're talking in our organization about doing AI and we're not doing our own analytics rigor, that's an incongruity. People sniff that. Our clients sniff it, our employees sniff it, and team members. So I think solving these paradoxes and thinking about the paradoxes are really important to the future of our industry as we think about the future. And it's why we think trust is the new algorithm. So what are we going to do in the coming year as we think about operating in this environment? Well, at Outsell, we say first, be ready. Culture, values, purpose, they matter. They matter to recruitment, they matter to retention. You're going to hear a wonderful presentation tonight. We're opening our conference tonight with this very topic. It's not to miss. I hear a lot about, I bet Jay, you and your team do, how do you improve culture? How do you change culture when you've just merged companies? Culture, values, purpose, hugely important. Core competencies, what are they? In that noisy value chain that you participate in, what are you going to be really, really good at? And what are you going to outsource, partner, let go? Transparency, how you do business, how you get your data, how your algorithms work, really important for the future. And delivering really great experiences. Trust, we believe, is the new algorithm. We talk about building products rationally. Are you going to be a product? Are you going to be a platform? Can you be both? Are you just going to pipe data someplace? There are great businesses that just pipe data. You don't have to have the platform. Let somebody else do it. Let them do it super well. You'll be really good at the smart data that you're providing through those pipes. Think about that through the concepts you offer, the use cases, whether they meet needs. We call this an information product development lifecycle. It's not new. It's been around for many years. David DeWolf, you'll hear more about the CEO product mindset tomorrow. He's written a book, Product Mindset. This is common in our industry, but we can get better at it. We think executing well and offering trust, bringing those customers into what you create, and thinking about whether you're going to buy, build, partner, how you're going to commercialize the channels. We heard this morning about the startups. How are they going to get their products to market? The biggest issue with startups, the monetization, the channel, the growth. And then lastly, measuring performance. Last, execute reliably. I'm going to take us full circle to where we started at the beginning of our presentation, and I will take you to where we ended last year. Because at the end of the day, it's the execution that matters. Are you open and disclosing? Are you diverse in thought, word, and deed, or talent, thought, and culture? Are you analytics driven, inside as well as outside? Do you have separate product management who lives, eats, breathes the customer experience? Who is that champion with technology and engineering, who works with the content team, who really can build the bridges with customers? Are you mystery shopping the metrics and taking real strong stands around improving your sales? Because we keep hearing about talent with analytics, talent with sales, improving renewals, and yet phones aren't getting picked up. Links are broken on websites. Basics. So really think about how you're going to compete for market share, because I believe part of our future and success is not only about relying on partners and driving innovation, but really improving the sales and the professionalism of our industry. I think we can continue to improve that relentlessly. Measure brand, and last but not least, be keenly focused on marketing and delivering trust. We have a window of opportunity. I mean, let's think about it. Authoritative sources, so old-fashioned, so out the window, so non-Google, so not Silicon Valley. We have a moment in time to go back and market and keep marketing with a single unified voice, with our associations, with each other, about quality. Because I believe it still matters, and I don't think it goes out the window. I think standards for quality may change, but we have real opportunity to continue to press that message and lead with that message. And I invite you to think about that and execute that way. And as you think about and execute trust in the next and coming year.